Today, I'm going to show you how to estimate the special assessments amount on a property and also how to calculate the overall tax rate yourself. Here we go. Hi, I'm Jessica Genung with the Genung team in Active Realty. Welcome if you are new here and welcome back if you're not. I always really appreciate you checking out my videos. Let's go ahead and get straight into our topic. I will begin by saying that your lender is typically the very best person to give you the most accurate amount of your property taxes due, and your realtor, they should be able to give you a ballpark estimate. The ability to roughly calculate this on your own should save you some time by eliminating the step to ask your lender or your realtor and then having to wait for them to respond. Or maybe you're just in the research phase and you are not yet working with a lender or a realtor. It's really helpful to be able to estimate this amount on your own, and I'm going to show you how. This is a part 2 video to this video that was published a few weeks ago. I said I would be making a second educational video showing you the steps to calculate the taxes on your own. So let's get moving to an example. I'm going to start with a low tax home, and then we will do a second calculation on what I consider to be a higher tax home in our area. Let's look again at this example home that I used in the first video. It's located in the Golden Triangle area of Murrieta. It was built in the year 2000, and this is a screenshot from Redfin, but you can pull this information from whatever search site you use, such as Zillow or Realtor.com. On Redfin though, I scrolled down towards the bottom here and all the way to the sale history, and then I clicked on the tax history tab here. So that part is important. We're going to need these numbers in order to calculate the amount. We are going to be looking at the data for last year in 2021 because we do not have the data yet for the current year of 2020. A quick reminder about Proposition 13 to help explain some of these numbers. Proposition 13 generally limits the annual increases in the base year value of real property to no more than 2% per year. An important exception to this is going to be when property changes ownership, like a sale, or when the home is brand new construction. Essentially, Proposition 13 converted the market value based property tax system, meaning you pay taxes on the current market value of the property, to an acquisition value based system, meaning the amount you pay is based on the acquisition price. Again, the assessed value is capped at a 2% increase per year. Meanwhile, properties in California, and especially over the past 2 years, have appreciated much, much faster than 2%. Okay, so back to my form on Redfin here. So our critical numbers that we're going to need is the current assessed value. Again, it's not the market value. I will get to that. And we're going to need the last data for the yearly property tax amount. So I've circled those two numbers here. So we're going to start by taking the assessed value here, this $465,670, and we are going to multiply it. So I'm actually just going to write it out for us here. 465,670, and we're going to multiply it by 1.1%. That's our base rate. It's 1%, plus there's always some additional charges on top of it. So the ballpark amount is 1.1%. So we're not going to be 100% accurate. It's going to be a ballpark, but we're going to get pretty close. So it's actually going to be times 0.011%. And the total of that amount is going to be $5,122. So this is going to be your base tax amount. So we are now going to take our last property tax amount here, this $5,410, and we are going to subtract our rough calculation here of the base rate, which is $5,122, and I already did the math here. It equals $288. So this first exercise here is going to be calculating the special assessments. So the rough calculation of the special assessments for this property is $288. So I looked up the actual special assessments, and it is $222. So we're only off by about $60. So it is a pretty close ballpark. So now, if you want to figure out if you were to make an offer on this home, so this home, although the assessed value because of Proposition 13 is much lower than the actual market value, but the current market value of this home is about $650,000. So if you take $650,000 and you multiply it by 0.011, so that's 1.1%, you are going to get your base tax rate, which is going to be $7,150. You're going to add in our special assessments of $288, and you're going to get $7,438 is what you would owe on taxes. So this number, although the current owner is paying $5,400 in special and property taxes right now, is a lot less than what you would be paying at the current market value. So last calculation that will run on this particular property is what is the overall tax rate. So you just divide this 7,438 by the amount that you're going to buy the property for, and this property has a tax rate of 1.144%, and that is rock bottom for Murrieta. That is about as low as it gets. To wrap this one up, I just want to emphasize that all of these numbers are per year. So if you want to find out in your monthly payment how much are you going to be paying in property taxes, you're going to take this total property tax amount per year of $7,438, and then of course you will divide it by 12, and it's going to be $619 per month. Okay, we're going to look at our second example here, which is going to be a higher tax neighborhood. By the way, if you are finding this information helpful, we would love it if you would like, comment, or subscribe to our channel. That really helps us out. So a little background about this particular property. You can see the assessed value is not very much more than our last property, but the taxes are a lot more. So this property is in Spencer's Crossing. It's a newer construction community, which means that it is going to have higher taxes. So that is the trade-off for new construction. So again, we are going to take our assessed value here, this $545,618,000, and we're going to multiply that times 1.1%. And I have already done that calculation. It is $6,001. Now that we have our base tax rate approximate calculation, we are now going to be looking at what the current owners are paying, which is $10,182. We are going to subtract $6,001 from it, and that's how we're going to come up with our special assessments amount. Because this amount here is including their special assessments, so we're taking away the approximate base rate amount to get our special assessments. Which I have calculated at $4,181. Okay, so just to give you an idea that we are just looking at ballpark numbers here, they're not going to be 100% accurate. I looked up what the actual special assessments were, and it's $3,931. I apologize, my handwriting is terrible, especially with this pen, doesn't help, but it's already not very good. So that's a difference of about $250. So we're looking at rough ballpark numbers here. So this particular property in Spencer's Crossing is now worth about, let's call it $700,000. So we're going to be multiplying this $700,000 times the 1.1% rate, and we're going to get $7,700 for the base rate. We're going to add in our estimated special assessments, which are $4,181. And we are going to end up with $11,881 for our yearly property tax rate. So just for fun, we'll also calculate the monthly rate divided by 12, looking at about $990 a month. And if we divide this total tax number, $11,881 by what our offer price or what our purchase price is going to be, the $700,000 here, the total tax rate for this property in Spencer's Crossing is 1.697%. So we've got quite a big difference between these two properties and overall tax rate. One thing that I did want to mention here that is kind of important, if you are trying to calculate the property tax numbers on your own and something just isn't seeming quite right, it's not adding up. There is this property tax line item that we run into on occasion, and it's spelled out in the special assessments as RCOG, WRCOG, I believe it is, and it's actually a hero loan. So they were actually somewhat predatory loans, quite frankly, because they're not doing them anymore, and it's a rule that the sellers are required to pay them off before the close of escrow. But they were when formerly homeowners had decided to finance like solar panels and HVAC systems and these various things. It was a particular kind of financing that they could attach to the property taxes. There were some tax benefits. It was kind of a sales gimmick, if you ask me, just my opinion. But they were a little bit predatory, I think, which is why they don't do them anymore. So sometimes the taxes will seem, you know, $2,000 or $3,000 or more $1,000 per year higher, and it's because of this hero loan that's attached to the property taxes. So if that's the case, just reach out to your realtor. If I'm your realtor, reach out to me and just say, you know, there's something kind of going on with these property taxes. Can you give me the actual amount? Hope that this wasn't too confusing. I know I'm not a math teacher, but hopefully this helps you be able to calculate it and understand it a little bit on your own. And as always, let me know if you have any questions, and we'll see you next week. Bye.